Welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going to get into the weekly numbers of our portfolio. This is for week 18, as of today, November 23rd, 2024. So let's get into our numbers. So we first up have our portfolio's net worth of $264.55. And again, that's as of today, November 23rd, 2024. So we have our portfolio weekly data. We had a really strong turnaround in our performance. Last week we were coming down. It's kind of off the post-election the hype. And now this week just turned around completely. A big part of that's because of gold, and we're going to get into that. But it's just a huge run up. 3.06% in 1 week. I said this before, like 2% in 1 week for this portfolio and how it's set up is already a big number. So 3% is like a big number. We've had no net cash flow this week, so no new cash coming in. This is from November 18th to November 23rd. We have a market gain of $6.01. It's really good for 1 week. Really good for 1 week. 3% in 1 week. Now we have our portfolio monthly data. This is from October 23rd to November 23rd. You see that kind of just curve upward right here. This is that last week, just the week that passed. Where we have a market weighted return of 3.2%. We have a net cash flow of $28.65. I always do a $30 deposit every 3 weeks. That's right here on November 6th. Every $10 we auto deposit to the cash account. Just every pay period, you can think of it that way. Every pay period, $10, and then once the cash account exceeds $25, then it takes that cash and invests into the portfolio based on the percentage weighting. So we'll show that, or we always show that. So we have a market gain of $8.97 and a dividend earned of 13 cents. So this is a pretty good week, pretty good month. It was a pretty good week, which made it a pretty good month. The same thing with our portfolio quarterly data. So we have a money weighted return of 8.26%. I think that's the highest so far of a 3-month period. We have a net cash flow of $119.87, so 120. So we have 30. Remember, 30. Every time we see a stair step, that's $30 deposit. So 30, 60, 90, 120. Right. So 30, 60, 90, 120. So those are the 4 deposits right here. That's why you see that. This is from August 23rd to November 23rd. So we have a market gain of $14.20 over that time period and a dividend earned of 81 cents. So this is our portfolio quarterly data, right? When we get to a full year, we'll be able to do the yearly data, which would be great, because then we'll see over a long time horizon. So here's our portfolio weekly percentages. As you can see here, I did make a change. I increased the allocation to US dollars from 15% to 20%, and I decreased the position to bonds from 20% to 15%. So on here we have gold still at 30%. It's been 30% this whole time. US dollars adjusted is now at a 20% position in our portfolio. Commodities still at a 15% position. Stocks a couple weeks ago, I forget exactly which week, but we increased it from 10% to 15%, so we're still at 15%. As I just said, bonds went down from 20% to 15%, so that 5% came out of bonds and went into US dollars. And Bitcoin down here still at 5%. So the performance for the week: gold up 5.58% for a market gain of $4.24. Big move right here, big reversal. And we'll show it on the charts. So the previous week, gold just came crashing down, and then you see this past week just happened, it just spiked back up. So just like a V on the chart. So came down and then went up, right? Complete reversal. So that's why I didn't decrease my position yet, because it didn't break trend, and I wanted to wait to see what happens, and it reversed. So that's really good. US dollar up 0.92% for a market gain of 46 cents. Dollar's still been coming up. I think it's at 107 now, the DXY index. Commodities, USCI ETF, 2.94% for market gain of $1.13. Our equal weight stock index, or ETF, RSP, up 2.53% for a market gain of 97 cents. Our government bond ETF, GOVT, up 0.02% for a market gain of 1 cent. And our Bitcoin ETF, IBIT, up 7.83% for a market gain of $1.05. And Bitcoin's like tapping on the door of $100,000 right now. So everybody online, because they love big round numbers, they don't think like nobody. I don't see price targets for Bitcoin like 92,408 or 98,709 or something. It's always like 80,000, 90,000, 100,000, 110,000, right? They always just big round numbers. Right, so big round numbers coming. If it hits 100,000, everyone's gonna be all euphoric about it. Probably gonna be a sell-off too, but we'll see. So those are our weekly numbers. Monthly percentages. So our gold ETF GLD down 1.12% for a market loss of 85 cents. So this is over the month. So a big part of that is that drop. Again, we reversed. So like now we're starting to gain some of that back. US dollar ETF UUP up 4% for $1.05, 57 cents for the month. That's really good. USCI, our commodities ETF, up 3.4% for a market gain of $1.25. I'm still thinking inflation's here to stay for a little while, so we're going to see probably commodities still be elevated. Our equal weight S&P 500 ETF, RSP, up 3.33% for a market gain of $1.21. Our government bond ETF, GOVT, down 0.88% for a market loss of 41 cents. And our Bitcoin ETF, IBIT, up 46.73% for a market gain of $5.08. So big moves for Bitcoin. I think I said last week, like Trump is basically Bitcoin daddy now. Everyone's like super bullish on Bitcoin because he got elected. It's kind of funny. Quarterly percentages now. So over a 3-month period. Gold ETF GLD up 8.14% for a market gain of $4.66. So pretty good for the quarter. US dollar up 8.46% for a market gain of $2.57. So this is really good. The US dollar is turning around. Like I said, long-term I don't think it's sustainable because a stronger US currency is going to affect the global market. So I don't know how strong they'll want it to be. They might even print money to lower it. We'll see what happens. US commodities ETF USCI up 7.99% for a market gain of $2.02. So these top three right here, actually these top four, almost at 8% each a piece. That's a lot. Our equal weight S&P 500 ETF RSP up 7.4% for a market gain of $1.76. Government bonds, which I may still need to reduce, down 2.58% for a market loss of $1.25. I don't know if it's worth it to go to 10% because I don't know. Bonds are like the hardest ETF I've dealt with over this time. I'm not good with dealing with bonds. Bitcoin ETF up an astonishing 73.76% for a market gain of $6.45. This is over 3 months. 73%. Incredible Bitcoin, incredible. I remember it went down from March 2024 to about October 2024. It went down. I think at its lowest, it went down 25% over that time period. So for several months, it was going down, 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 down. So all the people like pumping it, they were pumping it as it went down. Right? Only recently, leading up to the election and post-election, has been going up. So most of the year, it's been going down. That's basically what I'm saying. So we did have some portfolio transactions. I did a rebalance, as I said earlier, on Monday, November 18th. You see right here. That's when I decreased a government bond position right here. I sold. I reduced it from 20% to 15%. And our Bitcoin ETF was doing very well, so it also sold some of it. And I bought UUP, which is our US dollar, so I increased that from 15 to 20%. And then because gold was down that previous week, it took a big drop. We bought some more gold, which turned out to be really good, even though it's $1.59. But we're up. $1.59 is up 5.5% in 1 week. That was like great timing. So this is our buys and sells. So again, this is on November 18th. So $15 basically. So again, just primarily swapping or reducing government bond down from 20 to 15 and increasing US dollar from 15 to 20. So now we get to our Illuvium staking. Currently, as of filming, we're at $47.60, so we've been going up. It says up 11% in 24 hours. Our current staking, our current ILV being staked is 4.23 ILV for a market value of $201.21. We still have our two payments we've collected so far, 0.012 ILV, which are a current market value of 58 cents. And we have no new revenue distribution. This is week 18. So we have our 4 vesting tokens for 1 year each. We have our first that we did on July 27th, which unlocks in 246 days now. We have the second on August 24th, which unlocks in 273 days. We had our third on September 25th, which unlocks in 306 days. We had our fourth on October 25th, which unlocks in 336 days. So probably on maybe Monday, because I'm doing it consistently around like the 25th, we'll say, on average. I'll do our next stake, which will be November. So you'll see 5 right here. So we currently have 4 stakes. You'll see a 5th one. So every month I just buy $40 worth of ILV token. Basically I'm kind of matching our ROI return on each of these portfolios. I'm depositing $40 each, so I'm trying to match the M1 portfolio, which is $10 each week, which is about $40 a month, and then $40 in our ILV staking portfolio. So 40 and 40 basically. So $80 a month, you could say. Well, literally. Well, not literally, I should say, because some months have 5 weeks in them, but basically $40 a month in each one, so $80 total for my investment. So these are the 2 ROI portfolios: the M1 portfolio's ROI and our passive income and our Illuvium vesting ROI. And currently, as of this week, no new revenue distributions. So hopefully, before the end of the year, maybe we get like 1 more. That way we'll have gotten 3 since July. Not that it's needed, because it's still, for all of these game coins, like more in a bear market still, but I do want to see the consistency in this. So no Illuvium transactions. You'll probably, like I said, you'll probably see one next week. So now we do the fun stuff. We get into the charts. So right off the bat, looking at gold, this is what I was talking about right here. So the previous week, you saw all this red. Here, let me do this. This is what you saw the previous week. You just saw this red coming down. Like if you look at last week's video, week 17, this is what you saw, right? So this is post-election. This is the red coming down. This was gold. Now, this week, you see, boom, look at that turnaround. Hit just about to hit the green line, and then just did a fucking strong reversal, right? Now, I didn't know that was going to happen. I was hoping that was going to happen because, we look at this long trend line that it's been going just up and down, bobbing around, in this trend. And sure enough, it did, right? It reversed. Now, I don't know if it'll sustain it. I don't know if it'll break above it, but as long as it stays up in this uptrend, we have no reason to sell gold. I've been saying that every single week. We have no reason to sell gold. Even when this was happening, I was like, I wasn't convinced that this is going to continue to break down, but I also, was watching, like, if the market dictates it's going to happen, then it's going to happen. Then I have to deal with that. But as of right now, I said no reason to sell gold. This is a strong reversal. Like, look at that V shape. This is a strong reversal. All right, so gold's still killing it since October 2023, just still going up, up, up. Right? That's why I said I don't think inflation's going away yet, because commodities, are still holding, and then gold's going up. Plus, bond yields are going up. Our US dollar ETF, just look at this strong right here, just this strong uptrend right here. This was the previous week, kind of same thing. It looked like that about. So it was going up, and then just barely started to come down. That's when I increased it by 5%, and then just boom, got this little extra. There's a sharp up increase right here. So now we're back above this green line and pretty well above it too. So it's still more in that bullish pattern. That's not moving chart. So the inverse, being bonds going down, but dollar going up. So that's why we increased it. So we're at 20% now. So this is kind of a sharp move up though. So I want to see if it comes back and maybe bounces off this line and keeps going up. But as of right now, we have 20% of our allocation in US dollars. So 30% gold, 20% US dollars. So 50% of our portfolio is in gold and dollars right now, 50%, 50. So as of right now, I don't think I'm going to increase it more. I think where we're at, 20% is good, because this trend, it hasn't been very long, so I'm not like in a rush. But I think right now it's doing okay, so we'll see what happens. Our S&P 500 equal weight ETF. So you see this also strong reversal. Last week, same thing. If I show you like this, it came down. You just see the red. It was coming down, and I increased it to 15% like a couple weeks ago. So it was already coming down after that. So of course I did bad timing. But now look, a strong reversal, strong turnaround. Overall, though, like I said, I'm still cautious on the stock market just because the economic numbers aren't as good with like job postings. I'm sorry, non-farm payrolls and continued unemployment claims. It looks like their non-farm payrolls is coming down, so no job creation is coming down, and unemployment claims coming up. Not both of them drastically at the same time, but like they're both trending in bad directions. So I kind of look at the stock market as like a gauge on the healthiness of the public companies, but also like looking at employment numbers. I think that employment numbers can affect this. But as of right now, that was a strong turnaround. We're pretty much at the all-time high that we were back in November 11th. So we're right around there. So we're going to see how this goes. As of right now, we're at 15%. I think I'm going to keep it that way unless this trend breaks down. You saw a couple times it was trying, but it hasn't done it yet. So we're just watching it right now to see what happens. Then we have our commodities. We have a nice little sharp spike up right here, which I like. We're 15% in our commodities ETF. And this one goes back, keep showing this. This is 2 years. We've got the really big run up, and then just right here, this green trend. This is since July 23. I'm sorry, July 2022. You see this trend's been going up, and it's right now it's pushing pretty much. Yeah, it's at its all-time high right now. So this ETF and commodities is at its all-time high. Like this was like the high back here, then hit it once or twice here, and then it's like now it's at its all-time high. So like I said, I don't think inflation's going anywhere, not yet at least. Of course, the opposite of inflation is deflation, and people will debate which is better or worse depending if you own assets or liabilities. I just prefer to own commodities because if inflation's going up, then I'm going to own commodities because usually commodities go up and inflation goes up. If inflation goes down, then probably commodities are going to go down. Then I would be lowering my position to commodities. But like I said, I don't see the change in the market where that's happening. And I think regardless of which administration won, I think they're going to be inflationary. They're going to be spending money. We're already in debt. We don't have the tax revenue to cover it, so we're gonna use deficits. We're gonna spend, and it's gonna cause inflation. So, as of right now, 15%. If I see some of the economic plans and they come out and they really start spending money, I might increase this to 20%. I think it's possible. But as of right now, I'm not gonna change anything. I'm gonna keep it at 15%. But right now, all-time high. Just like gold. It's like coming up, right? It's not at the all-time high, but it's been coming up strong. But watching commodities and gold together, both going up, that's like very inflationary. Government bonds. So been coming down. Let me show you on a 5-year chart. So in the past, I showed this where we peaked back here in March 2020, basically hit the pandemic, and then just boom, came down. We kind of hit this bottom area here, and it's been slowly coming up along this green line, but it broke it right here. Right, so it's kind of coming along this bearish line, and currently it's under this bearish line, this red line. So I have it at 15%. I don't know if I'm going to go down to 10% with this. Like I said, bonds are complicated. We have started a rate cutting cycle. The Federal Reserve cut twice. First was a 50 basis point cut, which is 0.5%. Second was a 25 basis point cut, which is 0.25%. I believe the interest rate is high 4%, low 5%. I forget exactly what it is. But despite that happening, the 10-year yield curve, 10-year yield, the yield curve has gone up. So despite the Fed cutting rates, the bond rate has gone up, right? And also inflation is still coming up. So people were thinking that, if he cuts me too. if he cuts, you know, the interest rate's going to go down, but it's actually gone up. That's why bonds have been coming down, you know, because they're inverse of one another. So if rates are going down, you know, bonds are going up. If bonds are going up, the rates are going down. So even though he's cutting, you know, the bond market is going, the yield is going up still, so the bonds are coming down. So I'm very stubborn on bonds. I hate bonds so much, but I'm very stubborn on bonds, and I usually make the bad decision. Like, it's happened quite a few times. But as of right now, I don't see myself changing it from 15% to 10%. But if I did, it's because I think inflation's, you know, still in the system, and I would likely reduce government bonds from 15% down to 10%, and then take that 5% and increase my commodities position from 15% to 20%. So likely, if that were to happen, I would have like gold at 30%, US dollar at 20%, and commodities at 20%. So that's 70% of my portfolio in 3 ETFs right there. And all of them are primarily inflation-based or dollar-based. And then finally, the last one, the fun one, Bitcoin. Look how crazy it broke out of this fucking trend right here. Like, I remember I made this trend, and then like post-election just went boom, just came out of it. I'm just gonna delete this because it's kind of pointless now. I can't even make a trend like that. It's just so vertical. Like, it's gone so vertical. It's almost, Bitcoin's almost at 100,000. I think as of filming right now, it's about 97,000, 98,000. But it's almost at 100,000. But you see back here is what I'm talking about. So it went from March 24 to right here, this trend break, October 24. You know, it was in a downtrend. So if I get a little measurement tool, we'll say to this last little down peak right here. Actually, I guess this is technically the low. It was like way down here. We'll do it at the close. So we'll call it about 30%. So it dropped from the peak, which was in March, to the low, which was August. It dropped 30%. And then it kind of went sideways a little bit and then started going up. So, like I said, everyone who will say buy Bitcoin, stuff like that, they were saying buying it while it was going down. So they were losing money, just saying. Now, though, it's going up. So if you were to buy it around October into November, you were making a really good decision because, man, your turnaround time was really good. If you were buying it from March to October, you know, you lost money. It went down. But everyone acts like they're a genius. But we have it at a 5% position. Like I said, Bitcoin's just so volatile. I don't want to have it at a super high percentage in the portfolio unless I'm super optimistic on the market. And that would have to be the stock market as well as the crypto market. But as of right now, I mean, we're about to tap $100,000. It might break down from there because maybe it's just overbought. We'll see what happens. But either way, great little 5% position in the portfolio. 95% of the portfolio is invested in other things, but 5% of Bitcoin has been good for the portfolio. Even though it was going down at that 5%, now it's turned around and it's done a great little reversal. If I had a much larger position in this, from March going backwards, I would have lost a lot of money. You know, 30%. I would have lost 30% over a few months. That would have been bad. All right, so that's why, like I said, I keep it at a lower percent. By the way, it's doing good. It's going to continue doing good for us, I think. Hopefully into next year, we might see a crypto bull market. Who knows? You know, fingers crossed. But as of right now, those are our weekly numbers. So thank you always for watching. If you have any questions, comments, or criticisms, let me know. And I don't know how next week's going to go because it's Thanksgiving. I'm going to be out of town, so I might not have a video. I might just post something on X or something, or I'll try to do something. But if I'm delayed or I don't have a video next week, that's why. It's going to be Thanksgiving week. So just know that in advance. So week 19, we'll see what happens. But thank you again for watching and have a good day.